Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2025, and we're diving into Omnicom's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Omnicom's latest earnings report is quite revealing, especially with their strategic moves and financial performance this quarter.
Revenue and profitability overview. Let's start with the top line. Omnicom reported a revenue of $4 billion for the third quarter of 2025, with an organic growth of 2.6%. John, how does this compare to their previous performance?
Omnicom's revenue increased by $154.5 million, or 4.0%, compared to the same quarter last year. This growth is primarily driven by a 2.6% increase in organic revenue, which is a positive sign of their core business strength. The adjusted earnings per share came in at $2.24, beating the analyst's forecast of $2.15, which is a testament to their operational efficiency.
Operational efficiencies and future outlook. Despite the revenue growth, operating income decreased to $530.1 million with a margin of 13.1%. What factors contributed to this decline, and what does the future hold for Omnicom?
The decrease in operating income is largely due to acquisition-related costs and repositioning expenses as they prepare to integrate the Interpublic group. However, CEO John Wren expressed confidence in the future, highlighting strong momentum and significant new business wins. The pending acquisition is expected to create a leading marketing and sales company, which could drive future growth.
Segment performance and regional growth. Omnicom's segment performance shows varied results. Media and advertising saw a 9.1% growth, while regions like Latin America experienced a 27.3% increase. Can you elaborate on these figures?
Absolutely. The media and advertising segment is a standout performer, contributing significantly to the overall growth. Regionally, Latin America showed impressive growth, driven by strong market demand. However, there were declines in Asia-Pacific and Euro markets, which could be attributed to economic uncertainties and competitive pressures in those regions.
Risks and strategic initiatives. Let's discuss the risks and strategic initiatives. Omnicom incurred significant acquisition and repositioning costs this quarter. How are they managing these expenses, and what are their strategic focuses?
Omnicom is strategically investing in acquisitions and repositioning to enhance their capabilities in data, media, creativity, and technology. These costs are part of their long-term strategy to integrate the Interpublic group and strengthen their market position. The effective tax rate increased slightly to 27.2%, reflecting non-deductible acquisition costs, but they remain focused on leveraging strategic advantages for future growth.
Key takeaways. In summary, Omnicom has delivered a solid performance this quarter with a revenue of $4 billion and an adjusted EPS of $2.24, surpassing expectations. The pending acquisition of Interpublic Group is a significant strategic move. John, any final thoughts on Omnicom's investment prospects?
Omnicom's strategic initiatives and strong financial performance position them well for future growth. The acquisition of Interpublic Group is expected to enhance their capabilities and market reach. Investors should keep an eye on how these developments unfold in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Omnicom's performance in the comments below.